Hello guys, and welcome back to a new video and to a new NQ market review. As always, I'm going to share the trades that I took and the potential opportunities that you could have taken during the day. And also, I want to talk about something that is extremely important, and I got a lot of messages about it, of people falling into a trap, I would call it, right? And you basically can see it here. You see these consecutive lines? This is the main topic of our video right here, right? So today's price action was really beautiful. I don't know if I was in sync with the market or it was just an easy day, but sometimes you feel like you are in the perfect mental state, predict every single move, you can see potential traps, right, and easily avoid them, right? And sometimes you are in a really bad mental state and you just can't read the market, or you are too sloppy with the execution, and this can be, I don't know, a lack of sleep. Maybe you have problems in your personal life that can be reflected on the chart. But if you are experienced enough, you will listen to your inner voice and close a chart. If you're not, you're gonna open the chart and you're gonna take a lot of losses. I know that you can relate to that because I always get messages like this when people just after the market closes, everything seems clear, but when they were trading, they were just like lost. And unfortunately, this is something that you can't read about it in a book. You can't learn it from a video. Simply, you will need to experience it by taking losses, by feeling the pain. But I guess that's just how trading works, right? Repeating mistakes over and over and over until we can't take it anymore. The pain is too strong and we decide it is time for us to stop doing these things, right? And it's like fire. When a kid touches fire for the first time, that fire will burn his hands, right? And he will never do it again. But the problem with the market is that sometimes when you do a stupid mistake, the market will reward you for it. The market will give you money for it, right? And even if the next 3 times maybe, the market will punish you for that same mistake, but the mind, like, it remembers that one time that you got rewarded for it, and it forgets all the time that you took losses. So it is what it is, right? Anyway, let's get started with the analysis, but first of all, let me show you the trades that I took, right? Alright, so here's the trades that I took. First one was a really good one. It was high probable, aligned with everything I believe in. Anyway, so it was like a 1.5 hour trade. It has more potential, at least to this 2 highs right here. We're going to talk about this later on, but I'm a scalper, right? I don't like to hold my trades. The second trade was here, and it might look like a break-even trade, but it was actually a 1 hour trade. And the stop loss was a bit tight, but I didn't like how price action reacted on the highs, but all I was looking for is 1 hour, right? So I didn't bother to hold. And it was a risky trade. It wasn't the level that could potentially take price higher and take all of the highs right here, right? We're going to talk about this also later on. So let's get into the trading or the trade analysis, right? So let me remove some of these things and let's start from the 1 hour time frame, right? So as always, we are in an uptrend, right? Always with the uptrend until we reach the high right here, and then we're gonna see what's going to happen. This high right here on the weekly time frame, right? And because of the sweep, the zone, the failure to close, right? Uptrend, failure to close on the lows, a break of structures, closures above the highs, right? So this is the target and we are reaching for that. I don't know if we're gonna put consecutive up close candles to it. It doesn't matter. We are traders on the 1 minute and the 15 seconds, so this is irrelevant to us, right? But And let's go now to the 1 hour, and you're gonna see beautifully that hourly trend. So let's zoom out a bit, and you can see that we went all the way to here to sweep this low, the last low, and then traded to the upside, right? So also we have a couple of sweeps here, and then let's go to today's price action. So basically during London, after midnight open New York time, we traded to the downside, basic pullback, right? Expansion pullback, nothing complicated about this, pullback, right? And into this zone, we have a shallow top into it. We might see something like this, maybe, I don't know, but this is on the 1 hour time frame, right? We're not going to wait all of this. We're not going to wait for price to potentially take this low to take trades on the 1 minute, right? You can trade on the 1 minute without the need for that, okay? So just to clear this thing up, right? That is on the 1 hour time frame. Now let's go to deeper. Let's go to the 15 minute. And this was very interesting. So here, this huge candle to the downside, it was actually one candle, I believe, on the 1 minute. But this was CPI, I believe, or some red folder news. I don't care. But we are in an uptrend. This whole move traded to the downside, and we tapped into this bullish zone, right? We also swept a low here, right? But the idea is we are attacking. Our next target is the high, the first high that was put in by the news, right? Especially again that we are in an uptrend, we tapped into bullish zones, right? Everything is bullish. We swept the low, right? Sweeping lows, breaking above highs. This is typical uptrend as always. So this was the first target right here. The second target was it was this, right? Basically expansion right here, expansion to put in this high, and then pull back, and then expansion. Of course, this is a logical target. Anyway, so 9:30. After 9:30, we traded to the downside to take this low right here. Also taking this low, and we also have this failure swing right here, right? So smooth edges that we can target. This is what you want to see. I used to trade exactly this way when I was trading with ICT, but with DTFX, I put in more rules into it. I removed a lot of things, a lot of complicated things that I believe that it has no use, and it kept me from focusing on these right here, the sweeps, the body closures, the candles, how they react, right? So I believe everything else is just it's just fancy things to look smart on the charts. But from testing both systems, and this is the best way. And this is basically lower resistance and high resistance liquidity, right? So this is low resistance, high resistance liquidity, pretty good concept, right? So I give all credit to ICT. I learned that from him, and then by DTFX, I put more rules into it, and I started focusing only on them, right? So sweeps, failure swings right here, swing failure, obvious, and we are in an uptrend. Everything was aligned to head to the upside, right? So let's go now to the 1 minute or the 5 minute. Okay, so after that, actually, let's go to the 15 minute. So you know how my model works. I take the candle that causes sweep and I run the fib on it. I divide it by 4. Only after the next candle is closed above it, right? So when this candle closed above the candle that caused sweep, and then I run the fib. But look how beautiful it is. We broke it. It returned back beautifully to the 30%. We start trading higher. So this was 10:30. The stop loss was too big, right? So if I took this trade, I would believe that it's gonna take the whole day to reach my TP. So I didn't take it. Instead, I went to the lower time frames, right, and look for the same pattern. So let's go to the 5 minutes. This is a zone that we're gonna work with, this 15-minute candle. And let's go actually to the 1. So what happened right here? We start trading higher. We are breaking a lot of highs. So confirming the bullish order flow and the bullish shift. So this is a market structure break. And notice this swing failure right here. This high, and this high. So just like on the 15-minute, this right here, it is happening here. This is what you want to see. And a lot of times you will see explosive moves to take those out, right? So what happened? We wait, we don't rush. Where is the obvious lows that we get, that we can look for sweeps? We have this, right? This is obvious. But just above it, we swept liquidity with this high. So this low swept liquidity from this low. So this is something to be aware of, right? And price might not come back to this because it already took liquidity. And we put in this low, started trading higher, failed to take this right here. So this is important. Returning back, failing to close below it. And as always, the same thing on the 15-minute. We have it here on the 1 minute, right? So I took the trade on the 30%, and I took my profit somewhere around here, right? I know I could have easily targeted this, but again, I didn't want to go through the pullbacks, and I wanted a quick TP, like 1.5 hour trade. Okay, beautiful. Moving on to the next one, and see this one right here, that how price after taking liquidity, it couldn't, or I don't know, it wouldn't trade to this low. The same happened here. We took liquidity from here, right? Start trading higher, breaking all of these highs. And on the way down, we left these swing failure, right? Lower resistance liquidity. And traded all the way to here, but we couldn't trade below the low that take the previous low, right? Let's remove this so you could see it. So this doesn't happen 100% of the time, right? But it happens in the right context, right? Because look at this here. We have sweeping this low, start trading higher, topping into this zone, and then one more time sweeping and mitigating deeper levels of that candle, the previous candle that took liquidity, right? So just because you saw this, it doesn't mean that price will never come back to this low. So think of the higher time frame, right? Anyway, this is just a side note. We started trading higher, and I actually closed a chart here after this trade, and I came back on the PM session. But this is just a break of structure and then pulling back, right? Simple price action, right? A break of structure, and we are pulling back. And I want to talk about something important here. I don't want to waste time, right? So let's talk about it. So basically what happened is that this is the SNDR. Let's go to the 5 minute and walk you through why I drew that zone. Oh, I'm sorry, this is the wrong pair. Yeah, so you see this break of structure? This is the zone that caused that break of structure, right? So this is the SNDR, sensitive area, and you can see how price pushed away from it, right? But look what happened here. We put in this high or this low, started trading higher, right? Fell to close above this, start trading lower, sweep it, right? Sweeping that low. And so basically this is the range. that we can take a trade of. This is on the 5 minutes, so I would trade, or I would go to the 1 minute to look for the same thing, just like we did with the 15 and the 1 minute, right? On the previous trade. But look what happened on the 1 minute, and I see a lot of traders do this mistake. So we started trading lower, we put in this low, right? Started trading higher, and then one more time sweeping that low. And some traders will tend to take this trade right here. After we close above the candle that causes sweep, right? You can see that it worked, but it is not advisable to take this trade. And I tell you why. So they're gonna try to take this trade like this. Target maybe, I don't know, the high here. That's the first one. One more time, sweeping that previous low, right? Sweeping that previous low here. But this time we didn't have a break of structure above that candle that causes sweep. But look what happened next. Another sweep of that low. And we have now the break of structure. So they're going to take a trade like this. But they're going to get stopped out. Another one right here. Right? A sweep. And then they're going to try to take a trade here. So this is basically also known for ICT traders as the 3 drive pattern, but you can see that this is like a 7 drive pattern and it didn't work. A lot of sweeps. So why you shouldn't take this kind of sweeps? Especially when you have like a compacted price action, why you shouldn't take this kind of sweeps? So this is a filter that I put in, basically 7 filters on where you shouldn't take trades based on sweeps. So it will really help you to filter a lot of trades. It will tremendously increase your win rate. When you're using these filters, you can see that this is numbered as 3. I have 7 filters, but this is going to be a subject for another video. But you can see that this is the filter that I made. Reject recent sweeps. Reject recent sweeps. If the direct previous swing is swept and the previous zone is still resisting, you can see that we have, this is a bullish zone, right? And we have something like this. Put in this low, started trading higher. And then immediately sweeping that. You don't take the trade here. You don't take it. Just like here. You don't, when we have a sweep and we have the break of that candle, you don't take the trade. And I'll tell you the reason why. One more time, sweeping that previous swing here, we don't take the trade unless that zone, or we have a market structure shift above, not the candle, but the previous zone. So here, when we have this sweep, we don't take the trade unless we break above this high, right? Closing above this whole zone right here, this whole zone from this low to this high. Same here, we have a sweep, but we don't close above this, or I don't know, this sweep, still this zone is rejecting price. Here also, when did the break of structure happened? Here, here, right? We swept this and also swept this, but the break of structure happened, returned back, and then traded to the upside. So the reason why you shouldn't take this kind of sweeps is that sometimes this sweep, let's say on the 1 minute time frame, on the 15-second time frame or the 5-second time frame, it's going to look something like this. Let's start from this high, this up move, and then this down move, and then this up move. So it's going to be something like this. Right, so finished this up move, and then the down move is going to be something like this. And then here it happened, all right, the sweep happened here. So this low, taking this low. And then when you see that candle or body closure above the candle that causes sweep, on the lower time frames, it's going to be this right here. It's going to be something like this. And then we trade to the upside. returning back to the previous range, sweeping something here, right? Sweeping something here. And then when you want to take the trade here, price is going to keep trading to the downside, right? So let me show you. Here's that previous zone, which is going to be from this low to this high, right? And then the sweep happened here, but price swept this and only pulled back to this. So this zone is still pushing price to the downside, right? It still has the potential to push price to the downside. So this is not a favorable condition or yet confirmed a shift in the order flow, right? Shift in market structure. So it's better to wait for this to get taken. When you have consecutive zones like this and consecutive sweeps, you don't take it unless you see something like this, right? So this is one filter out of 7 filters, and I'm gonna do a video about, and I'm also gonna give you the whole guide so you can keep it in front of you when you are trading to filter some of the traps, right? So a lot of sweeps here, you can ignore all of these, right? And look for something obvious rather than this, right? Anyway, here what happened is that we swept this, the break of structure, returned back. So this was really a beautiful trade. I missed that. I was looking for something deeper. I don't know, I set my limit order somewhere around here, right? So I was a bit greedy, but we are still bullish, so we can look for continuation trades. So what happened here is that we traded to the upside, right? We put in this zone, and I've seen that this zone has left unmitigated. Price started trading to the downside, and this is a risky trade. Put in this low, right? Start trading higher, and then one more time sweeping that low, and then we immediately close above all of these candles right here, right? So I took my trade here. One price returned to here. I took my trade out of this candle. My stop loss was about here, and I took only 1 R, and I closed the trade early, I believe. It was like 0.9 R or 0.85, I don't remember. But when I saw this right here, price failing to take the high, so this is like when we talked about those swing failures on the 5-minute here and also here. So price was basically engineering liquidity, and it wasn't the time to take the high, right? So I closed the chart. I know that this is something for later, and this is not the right time to target them and to take the buy, right? Especially that we have left a lot of a big portion of this zone unmitigated, and this is a shallow top, right? So later on we dipped deeper into it, and then it happened that liquidation of those both highs, right? And here another sweep, beautiful sweep here, right? Same thing here, you don't take these sweeps. Same scenario, right? We are still pushing price to the downside, but after that we swept these right here, tapped into this zone, and then the break of structure happened. So I believe that this is the end of this video, right? It was a bit long, but I really want to talk about this, right? I have seen a lot of traders fall for this mistake, this 3-drive pattern, and some people, they don't even wait for that confirmation. They just take the trade like this and they target something on the upside. So if you have any questions, DM me in my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.